Here are the important candlestick patterns that you should know. Speedrun. First, bullish candlestick patterns, or in other words, if the following candles are formed, it indicates a higher probability of price making a move in the upward direction. After a series of red candles, a hammer pattern indicates a potential upward move. It's called a hammer pattern because it looks like a hammer. Here, the price made a move in the downward direction, but then there was more buying pressure that took over the sellers. In the inverted hammer, the price first made a strong move in the upward direction, indicating a strong buying pressure, but then there was a good selling pressure. However, the selling pressure was not strong enough to take out all the buyers. Then there is a dragonfly doji. This pattern is formed when the price makes a move in the downward direction, but then the buyers bring the price back to where it opened. This pattern is similar to the hammer pattern, except the price didn't close above the opening price. Bullish engulfing pattern is formed when the buying pressure is so strong that the green candle completely engulfs the body of the previous red candle. In the morning star candlestick pattern, first a big red bar is formed indicating good selling pressure, but then a small green bar is formed indicating a loss of selling pressure. The morning star pattern is completed when another strong green bar appears conforming a buying pressure after the loss of selling pressure. In the three white soldiers candlestick pattern, 3 consecutive green bars with almost no wick at the top are formed after a series of red candles. There are other candlestick patterns, but these are the most important and reliable patterns out there. Here are the bearish candlestick patterns that indicate a potential selling pressure. Shooting star. As you can tell, this one looks like a shooting star, opposite of the hammer pattern. When the shooting star pattern is formed after a series of green candles, it indicates selling pressure. The buyers made the price move in the upward direction, but then the sellers took over all the buyers and a red candle was formed. In the hanging man candlestick pattern, there was an increase in selling pressure as soon as the previous green candle was closed, but then there was some buying pressure from the bottom. However, the buying pressure was not greater than the selling pressure. Gravestone doji is a pattern where the buyers made the price move in the upward direction, but then sellers entered the market and brought the price back where the candle opened. This pattern is similar to the shooting star pattern and indicates a potential downward move. In the bearish engulfing pattern, the red candle completely engulfs the previous green candle. In other words, the sellers completely took over the buyers of the previous candle. In the evening star pattern, first a green candle is formed indicating a buying pressure, but then the buying pressure is lost and a small red candle is formed. The evening star pattern is completed when a big red candle is formed confirming a strong selling pressure. 3 black crows pattern is formed when 3 consecutive red candles are formed with almost no wick at the bottom after a series of green candles. There are also neutral candlestick patterns. They are formed when the buying and selling pressure is pretty much equal. A neutral candle can look like a plus symbol, also known as a doji candle, or can also look like a spinning top. When these patterns are formed, it means there is no strong buying or selling pressure, and you should wait for other confirmations.